Forecasting market impact is the silent killer of portfolio performance. Get it wrong and you leak alpha with every single trade. Today, I'm going to show you exactly how PredictMarketImpact provides accurate, actionable forecasts for multi-asset trading strategies so you can finally optimize execution and protect your returns. Let's talk about why this is so hard. In finance, we're trying to execute large orders without moving the market, but our tools are stuck in the past. Static spreadsheets can't adapt. At quarantadue.ai, every MCP workflow starts from the real tool interface, not from a generic prompt. The goal is simple. Keep the expert in control while the system structures the evidence. Inputs, reasoning, and outputs stay connected in one reviewable flow. Now the results become easier to compare, easier to review, and easier to explain. They use simple averages and miss the real-time dynamics. Markets aren't linear. Volatility shifts, liquidity changes, and assets influence each other. Selling stocks can move bonds. A generic tool treats impact as a straight line, but it's a complex curve. This leads to poor timing, higher costs, and eroded performance. It's the industry's dirty secret. So how do we fix it? PredictMarketImpact is built on market microstructure science. We model both transient and permanent price impact. Think of transient impact as the immediate wave your trade makes, which fades. Permanent impact is the lasting shift. Key concepts are order book depth, resilience, and cross-asset correlation. A big misconception is that impact is only about trade size. It's really about pace, information, and the market's mood. Our software uses machine learning on tick data, historical trades, and macro signals to capture these non-linearities. It learns and adapts. Now, what does the software actually do? You feed it your trade list and portfolio. PredictMarketImpact ingests live market data and your historical executions. It establishes a dynamic baseline for expected impact. Then it calculates a forecast for your proposed trades. You can tweak everything. Change the execution speed from aggressive to passive. Switch order types. Model different market regimes. The scenario engine lets you test VWAP against arrival price strategies. Every calculation is logged in an audit trail for compliance. You get alerts if forecasted impact spikes so you can adjust before trading. Let me walk you through a hypothetical example. Imagine you're rebalancing. You need to sell 20 million in tech stocks and buy 10 million in corporate bonds. You input this into PredictMarketImpact. The software sees tech is volatile today, bonds are calm. It forecasts a 40 basis point impact if you dump the stocks all at once. But if you slice the order over the London and New York overlaps, impact drops to 25 basis points. For the bonds, it suggests a specific window when dealer inventory is high. By following this, you save real money and minimize your footprint. That's the power of a precise forecast. For compliance, the software generates clear reports. These detail the forecast methodology, the input assumptions, and the recommended actions. They're built for regulators like the SEC or MiFID II, but also for your internal stakeholders. Charts and summaries make the data accessible to everyone from the CIO to the risk manager. This proves best execution and justifies your trading decisions. In summary, PredictMarketImpact gives you the clarity to forecast market impact, the control to optimize execution, and the evidence to ensure compliance. It turns a major risk into your competitive edge.